Hi guys, it's Ryan here with another episode of Blockchain Markets, and today I'm very excited because we're going to talk about LGO Markets, and I'm here with Hugo. It's CEO and co-founder. Welcome, Hugo.
Thank you. Thank you for having me.
So for the guys that don't know you, maybe if you could give us a bit of a background of your personal background.
Sure. So I've been in the blockchain space for a bit more than 2 years and a half now. So I started when I was at university in France at École Polytechnique, which is a scientific school. I started, I had a computer science class, and the teacher mentioned blockchain, so I just started, looking at smart contracts on the Ethereum blockchain, tried to code a bit. So that's how I started really, deep diving into the space. At the same time, because I had a financial engineering background, thanks to a couple of professional experiences that I've had with French banks, such as Natixis, SocGen, and BlackRock, which is an American fund. I started to invest my own money in crypto because I felt that I had the perfect mix between the technical understanding of the blockchain and the financial and investment expertise that I was starting to build. So I started building some strategies, systematic strategies on Bitcoin and Ethereum, which were the most liquid markets. And by doing that, I had the idea of launching a fund with a couple of friends. That was a year and a half ago, something like that.
Mm-hmm.
And so I discussed to a lot of crypto hedge fund managers. And I got to meet the manager of a fund, which is called BitSpread. And basically, this guy gave me the chance to open a long-only fund within BitSpread. So BitSpread is it's now a $130 million AUM fund. The main strategy is an arbitrage strategy. So I was trading on the strategy as well, just arbitrating the different markets, buying low, selling high.
Mm-hmm.
That's basically it. And I had this alpha strategy. And so by trading on the arbitrage strategy, I got to see, firsthand the problems with centralized exchanges. So, we had a very simple strategy, which was making a lot of money and very simple to execute. But there was a huge risk. The huge risk was the counterparty risk that we had with exchanges, because when you're doing arbitrage, you're forced to leave your funds, whether it's dollars, euros, or crypto, on exchanges. And so if there's a hack, well, you lose X% of your AUM. So that's a huge risk, more than the financial one. So this idea was still in my head, and in parallel, I got to meet my current partners, which are Frédéric Montagnon and Uziel Slama, which are respectively co-founders and CTO. And I got to meet them, maybe a year ago when they were working on the white paper. So I helped them finish this white paper. I helped them through the ICO and on the product management campus, the product management stage. And so now I'm taking care of, executing the strategy and building a cryptocurrency exchange for institutional, which doesn't have the kind of counterparty risk that we have with centralized exchanges. And that's LGO Markets. So that's what I'm doing right now.
That's very interesting because in the community, I got a lot of questions regarding security tokens, utility tokens, and so where do you see that happening now from this year on? And is that part also of the LGO Markets strategy of listing as well, both utility and securities, or one or only securities?
So maybe I'm going to sound a bit original from all the crypto crowd, but I think that, utility tokens, I don't think there's a big future for utility tokens, to be frank.
Mm-hmm.
The main reason is that when you take a company that's issuing a utility token, that means that all the users of the service of this company have to use the token, and that's just not viable. If you're a company, you want an economic profit, and you're going to accept clients that don't have those tokens.
Mm-hmm.
USD, they have Euro, they have Bitcoin, they have whatever. But if they want to pay for a service and they don't have your utility token, well, you're going to let them do that, because that's what a company does. Like, you need to have clients and you need to have some revenue. So I mean, utility tokens, I think it's the reason why a lot of people are saying, yeah, it's a utility token and not a security token, is just because they're afraid of regulation, right? They don't want to be considered as a security issuer, because it triggers a lot of rules, a lot of license. You need a lot of licenses. There's a lot of regulation, which is implied. What we think at LGO is that regulation is an asset, not the enemy, not the enemy of the crypto world. So we really believe in the future of security tokens and a regulated cryptocurrency ecosystem. So basically, what we're doing in the United States and in Europe. So we're building two types of markets. The first one is for non-regulated products, such as Bitcoin and Ethereum. Mm-hmm. So in the US, for instance, they're not Bitcoin and Ether are not regulated by the SEC. They're deemed as commodities, and commodities, as you may know, the trading on spot market of commodities doesn't need a specific license. Mm-hmm. The CFTC has jurisdiction of frauds on those markets, but you don't need a specific kind of license for this kind of trading. So that's one thing that we're doing. This commodity, this pure utility token, like those network tokens, which are pure utility tokens. We are building a platform which is non-custodial, transparent, and for institutional clients only, both in US and Europe. Mm-hmm. On the other side of the market, which is security tokens and regulated assets, we are at the moment in the United States applying for a FINRA membership to become a broker-dealer, and we're applying for an ATS designation by the SEC to be able to list those security tokens on the trading platform. So basically what we're building right now is the infrastructure to be able to trade both securities and non-securities in a fair, transparent ecosystem with less counterparty risk, and where the exchange is not custodying the funds at all.
Interesting. And then when it comes to issuing so you're talking about the listing part in the exchange, right? And on the step before, on issuing the tokenization of that security, is that something that you guys at LGO also provide, or do you is your plan to list tokens that will be already tokenized by other platforms like Polymath or Securitize or something?
Yeah, that's a very good question. So basically, if you look at LGO as a group, as a whole, our mission, the reason why we're here, is to build trust on all stages of transaction on a digital asset. Whether it's origination, which is an initial transaction, mm-hmm. It's secondary market trading, OTC trading, whatever. Our goal is to build trust on cryptocurrency transactions. So we have this, as I mentioned, so we have this platform, this trading platform that allows us to build trust on the secondary trading of assets. And we also have an entity which is called LGO Launch, which is focusing on building trust on the initial part, on the issuance of those tokens. So through LGO Launch and through our broker-dealer, we'll be able to initiate utility tokens, utility token generation, and we'll be able to do security token generation as well.
Oh, that's very interesting. So you have the whole stage, all the stages for one company that would like to securitize tokenize, the asset. Speaking of which, in security tokens, of course, there are a lot of different use cases, and perhaps one of the most common ones is real estate. But there are others, of course, like stocks or shares in closed companies and others. But do you guys have a specific vertical that you're looking at, like more like like bringing more tokenized funds or startups or real assets?
So basically, I'm going to talk as on the secondary market secondary trading part for institutionals, what we're looking at is institutional markets. And, you know, I know that I don't know, for example, the Litecoin technology may be very good, but I don't think there will be an institutional market on Litecoin. There is an institutional market on real estate, on private equity funds, on you know, open-ended funds and equity. There are institutional which are, you know, already currently investing in those kind of assets. Now, tokenized version of those assets, it's a very powerful idea. So what is tokenization? It's just another form of securitization. So what is securitization now? It's just the fact of taking a very illiquid asset, such as loans, mortgages, real estate, real estate ownership. You put it in a vehicle, and then you cut this vehicle into pieces. Now, that's exactly the same thing as a tokenized piece of real estate, tokenized loan or whatever. The only difference is that the record of ownership of those little shares is not held by a bank, a centralized bank that can do mistakes, things like that. This record of ownership is held in the blockchain. And that makes it much easier to transact and to exchange those pieces of ownership. And it can be much more precise, you know, like you don't have to have shares which are at least worth, you know, $100,000. You can have shares that are worth 1 cent for what matters. So by tokenizing, you can break an illiquid asset into smaller pieces which are all liquid and which can be divisible. So, for example, you know, it's always about. There's always been this big question of whether, you know, private equity could be accessible for retail clients without a tokenization, without a clear tokenization structure. Well, no. The answer is no, because for if you want to have access to the private equity asset class, you need to invest in a private equity fund, and if you do this, you need to have a certain amount of money to be able to fulfill the requirements of the private equity fund. For example, you need to invest at least $1 million. And there's a lot of people that don't have $1 million, but why couldn't they have, you know, this kind of exposure? It's a good asset class with very good returns. So, I mean, it's not fair for them, right? And so by tokenizing this kind of assets, the ownership of a private equity fund, you can actually give access to those kind of assets for, you know, $1, $10, 1 cent. That doesn't matter. You can tokenize everything of value and give it instant liquidity and let's say divisibility. You know, like there's no minimum investment. So that's a very powerful idea. So real estate is one use case. Private equity is another use case, and basically everything that has value. You know, contracts, you know, rights. So for example, tomorrow, you know, we could have a financial market where I could exchange the rights of Paul Pogba, who just won the World Cup. You know, the rights of Paul Pogba against, you know, a share of real estate fund. And so that's what's powerful about tokenization, is that everything of value, you can tokenize it, put it in a small instrument that is extremely easily exchangeable. Yeah,
that's it's a very powerful concept. I think that then we just like at the beginning of it, so then we can not even, as you said, I didn't even think of that use case before of buying the rights so then there's so many use cases for tokenization, securitization of real assets. So you said you're starting with in terms of a roadmap. I don't know where you are at the moment, and where's your roadmap looking for the next quarters of this year.
Sure. So there's when you're talking about roadmap, there's two aspects of it. There's a technical aspect and there's a regulatory aspect. So in terms of technical, we'll be live by Q3 2018. We're actually planning for a big launch for Consensus Invest in November. So for that will be the non-regulated part, so the BTC part. So we'll be able to have a Bitcoin trading platform against fiat, a non-custodial one. So we'll only be custodying the assets of our clients. We'll be using third-party custodians, right? So that's very different from all kinds of setup that you have currently. So clean exchange, non-custodial, transparent, for Bitcoin and institutional clients, that's something that we'll be able to deliver in November. For the broker-dealer and the ATS part, that's something that I'm not allowed. I cannot really, it depends on FINRA and the SEC, and that's not something I can.
Yeah, depends on
provisions on.
Yeah, it's understandable. I think that the whole topic of security, I think, will come more and more in the coming months, especially now that it will. I think also in the coming year, we'll see also a lot of these utility tokens that are now utility that the SEC will eventually recognize as securities, and so they'll have to do something about it as well.
For sure, no, for sure. It's a very big market, and I think the regulation. Like a lot of people are saying, regulation is we don't want regulation. They don't understand anything. But as a matter of fact, all the regulators I've talked to are very knowledgeable about cryptocurrencies, blockchain, and everything. They're very knowledgeable, and I think having a regulated market is actually a very good thing because it allows you to to single out bad players, to clean the market. There's no more manipulation. There's only good actors. All the guys that are making a lot of money by being not transparent and by manipulating the market, they will say, yeah, for sure, we don't want to have the regulation. We shouldn't regulate Bitcoin or whatever. I don't agree with that. Bitcoin is, maybe it's not a security, so to speak, but still in the way it's traded and bought and sold, it's a financial instrument, right? Why are you buying Bitcoin? It's just because let's face it, it's because one, you trust the blockchain technology, but two, you want to make some money out of it, and the two are linked. You make some money out of it because you think the technology is solid. I mean, at least that's my opinion. Right? And so as long as you're thinking that, as you're buying Bitcoin for let's say a financial purpose, you need to be protected, and you need to protect other investors. And so I think having like a clean setup, maybe not a too heavy regulation, but a regulatory oversight on cryptocurrency trading, on emissions, so for ICO, on security tokens, everything is extremely good and extremely positive for widestream adoption.
And speaking on that, on security tokens regulation, you mentioned that you have been looking you've been very involved in the States and also in Europe on that. Where do you see the regulations in terms of development? Do you see the US more ahead on that, with the SEC looking more in depth into this, or do you see Europe more fragmented in different countries, different regulations?
So there's a few things. There's a regulation on the security aspect and the regulation on the non-security aspect. So in terms of security, the US and the SEC have been have been very active in the space the past few months, and that's a very good thing. Mm-hmm. Much more than the ESMA in Europe. So the ESMA is the equivalent of the SEC in Europe.
Okay.
The SEC has been very active, and I think it's a very good thing. They've been writing things about ICOs, about trading platforms as well, about about scams and things like that. And they've been subpoenaing a lot of some people, projects as well, and that's very positive because it's cleaning the space, and that's leaving more space for legitimate projects. So I think the SEC is in advance here. Europe, things are lagging a bit, but there's no fragmentation because everything is done at the European level.
Union, yeah.
Those are European regulation. That being said, what I see is that European regulation right now when it comes to crypto. So just to finish on the security part, mm-hmm. As soon as when you're saying you're issuing a security token, well, you're issuing a security, right? And you fall under the securities law, and the securities law is, well, I mean, it's my opinion, would probably not be amended for cryptocurrencies. So, you're issuing and you're trading a security token. Well, you need to do a security offering if you're doing the ICO, and you need to be a broker dealer if you're facilitating the trade of the security token. And that's the framework. That's the framework that has been in place for close to 100 years now. And that's what exists in the US, that's what exists in Europe. And as long as you're talking about securities, that falls under a clear regulation. Now for crypto, so I think the US have been I've been the first to come up with like a crypto regulation, which is a bit licensed in the state of New York. But I see a lot of things moving in Europe, in France especially, because that's where I'm from. That's where we're based as well. There's a couple of regulations on the pipeline, you know, like so first there's been a regulation on there's been regulation on ICOs, you know, like a framework for ICOs to be compliant with the French regulator. Mm-hmm. So it's an opt-in basis. You're not forced. If you're doing an ICO, you're not forced to go through this process, but you're forced to disclose that you didn't go through this process. So that's
okay,
you know, it's incentive based, and I think it's pretty smart. For platforms, for trading platforms, they're actually doing the same. You know, even for BTC and ETH, they're doing things. They're doing the same kind of program for platforms to opt in and to say we're compliant with those rules. So I think that's very positive. There's a lot of things moving in Europe. There's Malta, which is very active in the space.
Yeah.
As you saw with Binance and all the crypto regulations. So definitely a lot of things moving in Europe as well. And no, I think those are very positive developments.
Yeah, that's also, you're right. Malta also, and Switzerland, of course, attracting all this with regulation. Well, I think that we've covered all the things that we wanted to talk about. I don't know if there's anything else that we haven't discussed that you would like to mention.
Yeah, sure. No, I wanted to dwell on a fact, something that is very specific to our way of working. So there's a common misconception about centralized exchanges and decentralized exchanges. Actually, I've been writing quite a lot on our Medium page about that. So most of the time, decentralized exchanges are actually centralized. You know, like decentralized exchange, what happens is that you have your own coins, your own wallet, and you send your wallet to a smart contract, which matches, you know, the trades and then settles those trades. When you think about that, you know, all the funds are centralized on a smart contract, and the smart contract, well, you know, the history has shown that it's not a perfect science, and there's a lot of people making mistakes. Even the best coders make mistakes, such as, you know, as we saw with the parity hack. Yeah. So decentralized exchanges, they're not the most secure solution, and I think that's a common mistake that people make. Centralized exchanges, a lot of people think centralized exchanges are centralized because they're not using the blockchain, but the reality is that they're centralized because they're pulling the funds together. So to understand that, you have to, if you're dealing with a centralized exchange such as Kraken, Coinbase, Gemini, Bitflyer, even you know, Bitstamp, or like all those fiat to crypto exchanges, what happens is that if you send $100 to this exchange, these $100 sit on the exchange bank account, so under the exchange's name. If you send one Bitcoin to this exchange or one crypto to this exchange, it sits on the wallet of the exchange. And you can see that on the blockchain. You know, there you always have those huge wallets which contain all those the crypto of the clients, and everything is pooled, and there's no segregation of funds. So basically, there's a small database that says client A holds X amount of Bitcoin, X amount of ETH, X dollars, X euros, and that's a centralized database, basically. And when you're hearing about the hack of an exchange, it's not the wallet, it's not the bank account, it's not the wallet that gets hacked. It's this little database. So basically, I'm a hacker. I'm pretty smart, and I'm able to, you know, to hack Bithumb, for example. And what I'm going to say is that instead of having 0 Bitcoin, well, all of a sudden I have 10,000 Bitcoins, and I'll be able to withdraw those Bitcoins very easily.
Yeah.
So that's why centralized exchanges are risky. It's because there's no segregation of funds, and all the funds are held by the exchange. Our view is that this is too risky for institutional clients. So the way we proceed, I mean, we don't reinvent the wheel. We proceed just as any traditional equity ATS equity trading platform has been working. We only take care of the matching of orders. And we have third-party custodians, which are holding the funds, which are both fiat and crypto. So in our case, every client has a dedicated bank account with some cash, and so they can put some cash in it. And this cash will be used by the client on the exchange. So if we have 10,000 clients, there's 10,000 bank accounts. And if you're a client on LGO and you want to, let's say, buy $1 million worth of Bitcoin, you have to send $1 million to this bank account, but it's still in your bank account, right? It's just another. On the crypto side of things, we're providing a wallet to every client. So every client has an address. All the funds are segregated. So if you say you want to sell 10 BTC on LGO, you're going to send 10 BTC to this wallet, and you'll be able to see on the blockchain that this wallet, which is yours, is actually owning, as a balance of plus 10 Bitcoin at least. So, all the funds are segregated. No fund, like whether fiat or crypto, sit on our account. We don't have any power on that. And so we're non-custodial in a sense. And that removes a lot of counterparty risk while still, keeping this kind of easy to use. It's still easy to use for clients. So that's what I wanted to stress.
I think that's crucial, especially because at the moment, in the cases you mentioned, if something gets hacked in one of those other exchanges, at the end of the day, it's retail investors, and they're usually investing your own money. So it's you running your own risk. But for institutional investors, it's another story. So then, it has to be something like what you mentioned, that the custody is also, it's on a third party as well. So and that's also, it's a good thing to also mention that for everybody, what you mentioned before about the regulation, that people don't want to have regulation, and at the same time it's a bit contradictory, because people that don't want to have that hold Bitcoin and don't want to have a regulation, but at the same time want the Bitcoin to go up. So if that's not going to happen in a massive scale, if the institutional investors are not into crypto. So it's
exactly.
And if you want them to be they have to have, of course, this kind of securities that they're not going to lose the funds, of not their own funds, but their clients' funds, which is, of course, very understandable. So then I would say for like what you said before, that for people that are reluctant about regulation, I think they should have a second thought, like maybe think about what are the consequences of not having regulation, and the consequences in the long term, and also now in the short term, is it's not having the institutional investors in the crypto sphere because of those things.
100% agreed. 100% agreed. Regulation has been the major, blocking point for institutional clients, because they don't know what to think about that. They don't know, those guys are regulated. You're a fund, you're regulated. You're a broker, you're regulated, and you need to comply with the rules of your regulator. And if your regulator doesn't say anything, or that doesn't act on the asset that you want to buy, well, you're not really sure if you can buy it or not. You're not really sure if you can act on that or not. So I think what the SEC is doing is very positive. What the European regulators and the regulators all around the world are doing for crypto is very positive, because it removes uncertainty in buying and selling cryptocurrencies for institutional clients. And when we have institutional clients on this market, there's less volatility, more volume. Obviously, the price goes up, so it's good for everyone.
Exactly. Well, having said that, I'd like to thank you very much, Hugo, for taking the time to talk about the securities and the future of crypto exchanges, and what if somebody is watching this and then they want to learn more about LGO Markets, where can they go? Where can they ask for more questions?
So there's several ways. You can go on our website, which is lgo.markets. You can go on our Medium page, which is on which we post a lot of articles. Our Twitter as well. So there's a couple of options.
Cool. Perfect. You mentioned that you already did an ICO, right?
Yeah, we already did an ICO in February under the French jurisdiction.
Cool. Perfect. Okay, then having said that, also thanks to everybody that has been watching this interview. And as Hugo said, if you want to learn more about LGO Markets, you can go to the website, check the Telegram, and read the articles on Medium as well. I'll leave a link in the description to the site as well. So thank you very much, Hugo. And I hope in a few months from now we can catch up in another conversation and see how has everything developed for LGO Markets.
Yeah, for sure. It would be a pleasure.
Great. Thank you. And cheers. See you guys in the next interview. Bye-bye.
Thank you.